Welcome to the second episode of really, really excited to talk about the success so far. And maybe after 4 or 5 weeks, you are success. Last week has worked out excellent, just perfect. So we have been able to make near about 15% over about a week's time for a capital of 44,000. So I'm going to be giving you rates which take capital between around 50,000, and let's see how much we could make it. So far on 44,000 capital, we made near about 5 lakh, 5,000 bucks, 5,000 plus. And if you are going to be following my rules, you would have made about 4,500, which is around 11%. Does not matter. I'm going to do calculation based on the rules that we follow. So before anything else, just let's talk about the markets as of today. So if I have to look at the today's markets, they are just to give you a background. We have talked about all these waves and about 75 minutes, and this is the yellow line is what we are going to be discussing starting with. If you want to look at bigger picture, go to my previous session. I also received some feedback that people don't understand what these counts are. So, in a very simple way, markets either they are in an impulse motive wave, which is going in the direction that the market wants to go, and motive wave is basically made up of five. So you will have one, two, three, four, and five. Okay, and then markets usually tend to go a little ahead of themselves, so they go with corrections. Now the corrective wave is made up of 3 points A, B, and C. Okay, so we are going to be looking at how it works, and I will try to do a separate detailed session section on the Elliot Waves. So let's look at it at that point in time. So before we go into anything, so this is the yellow line which we made up here one, then we had a two, and then we had a three. Why? How does the Fibonacci support this? If you take this size and then extrapolate onto here, I think I'm fairly okay. So we did about 161% on the upside. So wave three was 161% of wave one. Okay, that is wave three. After wave three completed, you had a correction. So market went ahead of itself. It gave a correction. Now this correction was perfect. I mean, there's nothing perfect about the market. There will be a little bit here and there, but it did very close to 50% of retracement. So market went ahead 50% because we were all aggressive buying. And then, wait. Probably we are too ahead of ourselves. So market retraced back 50%. That is wave four. Wave four is a corrective wave. Wave two also is a corrective wave. So this wave four happened, and then beyond that, we are inside a wave five. Okay. So how do we get the first target of wave five? It's very simple. We do 127% of wave. So that is 127%. That is where I have put in a target. That is my expected target of 18,200. That is where I expect markets to go. Okay. And another thing, if you want to look at another Fibonacci, very nicely placed Fibonacci ratio. So if you look at this is A and this is going to be B. So it market corrected exactly. C was 88.6% of B. So markets do, and especially Nifty, does follow very much on the Fibonacci levels. So that is where I expected this level 17,150 levels, and it hit perfectly and then reversed from there. When we talked last week, we were somewhere here, and I said the markets want to go up. Why? I will just go to one level deeper. So 25 minutes, and if you look at 25 minutes, so let me first show you this was the direction that we talked about, and then this is the up move that we are talking about in 25 minutes. So if you count these, let's just check whether right and then start counting. And I'm just doing it so that you will learn how to do it yourself. So this is one, this is a two, then this is a three, sorry, this is a three, and after three, you have ABC, which is called flat ABC, it's called path located against about it because ABC the usual difficult. It's a flat running ABC, which is A, B, and C. So this is where the wave four got over, and after that we are in wave five. Okay. Now again another thing before Fibonacci, you would look at it this direction. So if you really look at this correction, see, this is exactly 61.8% correction the first time, and the second correction 50%. So we expected these levels to be the turnaround levels. And if you remember over here somewhere, I did say that you can go ahead and you can write 17,500 put. We had 17,500 put because I was fairly sure that the markets will not come down below these levels and markets will go up. So it's about probability call it. So from here, where do I expect markets to go? So if I do this wave for replacement again, markets would probably go near about 17,850 levels. So that is going to be our next target. So what we have got two, three levels to watch out for in coming weeks. One is 18,200. So if I go to 70, or maybe I just zoom out a little bit and try to do that. So this is one level that we are talking about. I will put it in color yellow because this is following the yellow line. So this is one level that we are targeting. We do not expect to go below 17,500 yet, but there is a chance that first from here and then it will probably go sideways from this point in time. So that is where I expect going. Let's look at what could be a possible trade for this. So if I go back, uh, this is what I am expecting the trade to be looking like. We are going to play a little bit on the sideways side because Nifty has already done quite a bit of the move and it is going to receive some resistance at 17,350 levels, which is just another 50 points out there. And it is also going to have another resistance at 18,200 levels. And on the below 17,500 becomes is expected to be a good support. So we are going sideways. I recommend you short 17,500 put and 18,100. If you want to be a little more defensive, 18,200. So either choose 18,100 now or wait, just wait for markets to go a little bit higher. And once they go higher, you try. So start 17,500. So start up. So five. So I'm so sorry, I missed out something. So short put 17,500 and the long put 17,000. So you would start with this particular trade. Start with just this trade initially and let the markets go a little bit higher, maybe 17,850, 900. But you would see the resistance coming in. At that point in time, you add a short call of 18,200. 18,200. 18,000 and long call of 18,500. So this is how you should uh, try addressing the market. And if you do this, it is going to be costing you near about 55,000 rupees of margin. And with that 55,000 rupees of margin, you you should be able to get either 60,000, or if you do 18,100 as of today, that also is a fair bit of trade, because markets are not going to go in one direction. They are going to go up and then going to go down and then go up and go down. So they are going to be little sideways, in my opinion, and it should give you a pretty decent payoff with about 2% of risk. So if I show you the graph, it is going to be something like this. You have got lower break even at around 17,420 and higher break even at around 18,200 levels. And if you look at today's chart, it is going to be something like this. And the maximum risk that you should be taking on this trade is about 1,200 on the upside and about 2,400 on the downside. So if it touches 18,100, or even if you can go up to 18,200, that's not a problem. 2,200. So please take stop loss if it goes beyond this. So this particular trade, if you go with this trade, here are the numbers. This trade will give you, and I'm just repeating what the trade is. Trade is 18,100 and 17,500 put, 18,100 call to be shorted. Against it, you have to buy 17,000 put and 18,500 call. And if you do that, you are going to be able to take home about 3,865 rupees. Your risk, your capital is going to be around 55,000, which makes it to near about 9%, 8.59% return on capital in a week. Fantastic. With a risk of around 2,200 rupees. So if it goes below 2,200 rupees of risk, you exit it. You don't want to hold that trade, and if it gives you complete 3,865 rupees, just take it home and go merry. I'm sure you are liking it. If you're liking it, please do subscribe. I'm going to be doing it on almost on a weekly basis, mostly, and please do share it with your friends, family. Subscribe to the channel so that you going to be able to listen to it again and again. Happy trading, best of luck, and very, very happy Ganesh Chaturdashi. Enjoy. Cheers.